Hey everybody, we're sitting down with somebody I admire quite a lot, my mentor and one of Minnesota's, in my experience and other people's experience, top real estate agents. REMAX results, over 30 years of experience, and somebody that's been mentoring me kind of in the beginning, very much so, and then more along, kind of working mutual clients and so on together. It's been a lot of collaboration and a lot of really good feedback, and just the consistency and quality and just the representation of the buyers and the sellers. You're the person that kind of showed us there's levels to this stuff, and
Yes.
when everybody and their mom gets a real estate license, there's still a difference in the quality of the real estate agents and then the value that you guys provide. So if you can just fill us in on your experience, your certifications. Your business cards are
Sure.
barely fitting all those certifications on there, but
Sure. Thank you, Artem.
yeah.
Thank you for introducing me. My name's John Mazzara. I'm with REMAX Results. I've been selling homes actually since 1986. So for 39 years, I started when I was 21, right out of college, sold over 1,200 homes, worked the entire metro area, buyers, sellers, and investors. So over that course of time, I have acquired quite a bit of knowledge, and I'm happy to share that. And when you're working with a real estate agent, whether it's me or somebody else, they have to have had enough time in the game to be able to help you make the right decisions. You as a consumer might move 3 to 5 times in your lifetime, so you're not the expert. And since it doesn't cost you anymore to work with somebody that is, I would suggest that you work with somebody that has at least 10 years of experience. In my case, you get 39, but I would suggest you work with at least somebody that has enough transactions under their belt that they can guide you appropriately. As Artem mentioned, starting off, somebody that's new, everybody's new at one time, but you'll be their experience that they'll be learning from.
Mhm.
And that could be unfortunate, meaning you're going to make bad decisions in your real estate game. So when you're looking to purchase, find somebody that's competent. I'd apply for your job if you're looking to hire somebody.
Yeah, you've been, I mean, from my experience, anytime kind of any issues came up as far as the home sales and so on, getting your feedback. One example comes up from last year. We had a big real estate transaction where we were called out to do a good condition report on the roof so they could get the insurance company to basically approve the coverage. So I show up, I do the inspection, and we just find all kinds of issues. And then I send it over to you and just kind of, like some photos just for reference, and then just saying, hey, do you see this often? Does this come up? And then I think the stucco issues came up, and then we just found out that it was a single agent situation where they were representing the buyer and the seller, and a lot of that stuff was just forgotten. And you dove in kind of deep on that. You said that you would never recommend somebody to buy a stucco home without the drill test, without the moisture testing, the roof testing being performed, or the roof inspections being performed by a qualified roofing contractor. And you went pretty in depth as far as doing the homework for the homeowner or the buyers or the sellers, whichever it could be. So anytime we walked through the houses with you, that was kind of impressive. You would point things out that people generally don't think of,
Right?
and kind of see every kind of scenario, like predict basically any issues that may pop up. So from your experience, how did you get so good?
Oh, well, one of the things with regards to inspections, back in '86, there wasn't really a home inspection business. And today it's unusual to buy a home without a home inspection. And then there are things that I think, with the qualifications, let's say for an example, to be a home inspector in Minnesota are none. So you could print a business card tomorrow and be a home inspector. So just like I'd mentioned with regards to experience level of agents, there's that same experience level of home inspectors. And a home buyer may not know what they don't know and not have access to that information. So again, surround yourself with experts in the right companies. And myself, my personal experience with Artem and Foremost goes back at least 5 years and at least 50 or 60 homeowners that they have done work for my clients. And so I'm going to say pre-inspect homes as I walk through them. I like to educate. So I teach community ed classes. I have a YouTube channel, and I like to provide information so that people can learn. And with regards to that, I recommend that when we're walking through a home, that they take note of some of the functionality and obsolescence and consideration of future costs, like roofs, like siding, like furnaces and other things, sewer lines. So I point all that out to my clients so that they can make the best decision on that home. And with regards to sellers, I like to pre-inspect and see if there might be an opportunity to make an insurance claim and to have an independent party come out like foremost to view the home and see if there is enough eligibility. For example, you might see on a street, let's say hail comes through and there's 10 homes on that street, 8 of them are getting brand new roofs and 2 of them aren't. I can almost guarantee that the 2 that aren't have adequate hail damage and could qualify, but they might have done the process in reverse, meaning they called their insurance company rather than the contractor. Nothing against insurance companies, but if somebody works for the insurance company and they may be disincentivized to pay out claims if they're an adjuster that works specifically for the company, whereas a contractor is incentivized to find the damage and wants to do the work. And so I think having a contractor first, then if there's an adequate amount of damage, pursuing a claim, I think puts you as the homeowner in a better position. Now, I've helped sellers do that so that they can get more value for their home and more easily pass an appraisal, for example, and an inspection. And I've helped buyers where we bought homes and their agent didn't recommend that they get their home looked at, and then we've asked for that as part of our inspection and to make a claim under insurance. So I think you should be proactive as an agent to look for ways to add value to both your sellers and to your buyers if one party didn't do it. And that involves contractors to look at work, give bids, provide, and maybe even do the repairs in advance of putting that home up for sale. It will be a better experience for everybody, and that's in the event of insurance. If that ends up being used, that's why you have insurance. It's an act of God. You didn't do it. You won't be penalized. It's not like you got in a car accident or you were speeding. You can't control the weather. But if you've been paying premiums, that's what you paid premiums for. So why not make a claim? I can't think of a reason why. So it's a little extra work for me as an agent, but that's why I try to provide extra value and differentiate myself in the marketplace by helping my clients, buyers or sellers, maximize their experience in the real estate transaction.
Well, one of the best things you were, showing really in action was the fact that you were willing to deliver the value without asking anything in return. And it was kind of deliver the value, the money will come later, and then that was kind of consistently shown. Like every time we had anything going on, expos that we've done time and time again, we would the only person I still know that would be in the office. I think it was like 9 o'clock. It was one of the coldest days we had or nights in. A couple of years ago, we had it was like -40. I was driving, my heater was on full blast, and the windows were still freezing up as I'm driving to your office. 9 o'clock, I think, at night, and we were calling people, just getting follow-ups and just making sure that they got I think we were sending some certificates out for that, gift certificates, yeah. So doing those, and then you kind of working, basically your whole life is real estate. As far as I know, your wife is in mortgage financing, you're in real estate and financial advisory and so on. There's just so many different aspects of it that you're covering. And you mentioned the years of experience. That also kind of varies because I have a real estate license. Doesn't mean that I'm practicing real estate the whole time. I can continue to do my continuing education and, technically be a real estate agent for 10 years, but you're actually doing it. So that is a big factor. So you doing it for, it's a very extensive amount of knowledge that you have.
Yep, I'm kind of vertically integrated. I started with the real estate, then added my financial planning practice, and then a mortgage company. So I had a 3-legged stool. Right now I have a 2-legged stool. My wife is solely doing the mortgages. But besides Patty, I work with other lenders to provide access to many different programs. And I'm a big fan of pay it forward. I'm a big believer in karma. I think, if there isn't a reward immediately, I think people know, like, and trust you and can sense that if you're trying to help them out and trying to do the right thing. And I think that comes back. So I'm always a big fan of where can I help. I don't necessarily get paid on everything that I do, but by adding value, it helps my reputation, and I feel good, the client feels good, and the world's a better place. So, be a good human, and it comes back to you.
Oh, that's for sure. Yeah, that's been proven time and time again.
Yeah.
Overall, this is kind of switching topics a little bit, but what's your kind of outline for this upcoming season with the mortgage rates and just the housing market, sellers market, buyers market? What are your thoughts?
Yeah, 2025 is going to be interesting. Right now, there's obviously a shift in the politics, And the economy, we have been in an unacknowledged recession, in my opinion, for the past 18 months, and it has impacted real estate. The real estate market has been slower this past year in 2024 than maybe previous years. I think we pick up again in 2025. I don't see a dramatic change in interest rates per the Fed, but I do see them changing in 2026 and beyond. I think this is a year of transition, meaning policies will be changed, things will be put in place. For those that don't know, the Federal Reserve is not an arm of the government. It's privately owned by a consortium of banks. So therefore, the government, i.e. the president, can't influence directly interest rates because it's not an arm of the government.
Some
So
wish he could.
yeah, in some ways she could, absolutely. So you might find that interesting. Google who owns the Federal Reserve, watch a video on it, and you'll find that it's not the government. And therefore, Trump can't fire Powell or influence him directly or indirectly. I think you'll see, though, next year, just a guess, and who knows, I could be wildly wrong, but I think that there'll be maybe some alternatives that'll be developed and some incentives for the Fed to drop the rates if they want to continue to function as an entity. Now, that's just a wild guess, but if we take that out of the equation, I see interest rates staying about the same to dropping, and I see buyers coming back in the market, adjusting to these new rates that previously they were holding off, waiting for a drop, but now they've been told from the Federal Reserve, we're not going to drop rates, or if we do, it might be nominally and over 2 times. So it isn't going to be dramatic. So if you're holding off for 5%, you might get there in a couple of years, but at that time, the homes will have continued to rise. One of the sheets of paper that I have here is a sheet from the website mplsrealtor.com. And on that, you can go to the market data tab and get a feel for what's happening. Now, this is a macro sheet that I printed. It goes over the 13 county Twin Cities area. But I could have drilled down and done a micro review. I could have done, Eagan or Burnsville or any city that you want. But what this shows is over the last 12 months, year over year, is that the home values have risen about 5%, and a rolling 12-month average risen about 3%. So I'm asked often, when is the best time to buy a house? And in my opinion, yesterday, because the interest rates you can always refinance. It's date the rate, marry the home. But get in today, refinance if that opportunity presents itself tomorrow. If you wait for rates to drop, what's going to happen is every 1% drop brings in about 1 million new buyers nationwide. So you will have more competition when rates get lower, and the values will have continued, in my opinion, to appreciate. And when you get lower rates and more buyers, you're going to have more competition and bidding wars. We already have bidding wars, but you're going to have them in excess of 1 or 2 people. I just recently lost a bidding war with 8 offers. So it's starting, not as bad, but I mean, back in the day, it wasn't unusual to get 20 offers on a home, and somebody at least bid 10% over, and sometimes way over that. We're not there today. We could get in a similar environment with a dramatic drop in rates. So when should you buy? You should buy now. Take care of your housing needs today. The rate is a fungible item, meaning it could change, but the supply of homes and the number of buyers that could get worse in terms of more competition for you in the future.
So I have a kind of a curveball question.
Yeah.
Self-employment financing.
Yes.
That could be difficult for some.
Yes.
There's business records that they check. It can be a lengthy process. What are your tips for self-employed people as far as buying? Maybe a first-time home buyer program or something for them specifically, or?
You bet. So let's talk about different options for financing. If you're W-2, you work a regular job and you have done so for the last couple of years, and your credit score is 640 or above, you're not going to have a problem getting a mortgage. If you work variable income, so multiple different sources of income, or you're a nurse working, 0.8 or whatever, all of a sudden the rules changed on that. So you're going to want to get underwritten and not just go in a basic pre-approval.
How long does that take?
Underwritten, about 3 weeks, depending on how quickly you can provide your documentation. Self-employment has been and continues to be difficult. They're going to look at your last 2 years of tax returns and do some averaging, and maybe need an accountant letter and a current P&L. But there are lenders. So with regards to mortgages, there's basically four types. There's conventional loans issued by Fannie Mae and Freddie Mac. They're issued by government-sponsored entities or enterprises, which would be the Fannie, Freddie. They have their rules. The black box, has to fit within these rules. You have FHA and you have VA. FHA and VA are government insured loans. VA is for veterans only. FHA is for everybody. Typically is used by first-time buyers or people with lower credit scores. And then we have non-QM loans. So digging deeper into your question about self-employment, a non-QM loan is a non-qualified mortgage. They typically are originated out of California, but brokers here in town sell them. But the lenders are oftentimes based out of California. And they're more make-sense loans. So what they do is they go off of your bank statements. They go off of your deposits, not your net income on your tax returns. They go off of no ratio. So they go off of your credit scores and your down payment. So it's sort of like in the day back in the early 2000s when we had what are called Alt-A loans. They're the same thing, Alt-A non-QM. So they're loans or they're invested in by investors, and they make up their own rules. They usually require higher credit scores and larger down payments. But absolutely, as a self-employed borrower, if you go in to make a mortgage application, I would say work with a broker possibly as a self-employed person if you need some fungibility. If you're solid and you've been doing it for a long time and you're self-employed, you could utilize regular bank lending. They'll underwrite you, but a lot of the brokers have access to these non-QM loans that a regular traditional bank doesn't. So again, it kind of goes back to who are you working with. So if you work with me, I'm going to direct you in the right spot where I think the financing, where you might be able to acquire it. If you work with another agent that doesn't have access to multiple sources of financing, you may never hear it. So I like to do things a la carte. I like to bring in independent lenders, independent title companies, and find the sources for the people. Other agents are more vertically integrated where it's all the company, everything at the same company. They don't have the same level of knowledge. Having owned a mortgage company with my wife for over 25 years, we were brokering these types of loans. So while I'm not originating, I certainly have the working knowledge of where to go to find these products, and I can direct you so that we can help you buy a house.
Yeah, that's huge.
Yep.
That's a lot of different connections. It's not what you know, it's who you know, I guess,
Exactly.
at this point. Yeah.
Exactly.
Having those referrals and the networking.
Yep.
As far as, kids getting out of school now, out of college, just getting a job,
Yeah.
what do you think about them getting a house? Because from what I'm seeing, a lot of them are thinking they may never get a house. What are your thoughts on that?
It's interesting. A lot of first-time buyers today, young people, may not have enough income in their first job to qualify for a traditional house, if you will. And some of them are actually partnering up together. So you might have two people that are friends that are single, and they say, why rent? Let's come together and be a partnership, not a union, but a partnership business-wise, and let's buy that house together, live there, and then we'll, terminate it at some point in the future, and we'll have equity to roll over to our next house as our life changes. So that's something that you're seeing, and then they're potentially house hacking with other friends where they'll rent rooms. So they'll buy a large house together, rent to their buddies, and have it kind of like a frat house, but they'll do that and have a lot of fun that way. So that's one option. The other option is, today as a young person with even modest income, you could buy a townhouse, albeit a smaller one. Recently, one of my clients just bought a townhome for just over $200,000. Beautiful little unit, 1,050 square feet, 2 bedrooms, 2 baths, 1-car garage, fireplace. Built in 2003 in Inver Grove Heights. So that was an opportunity for a young person to get in the game. The average home buyer today is 36 years old.
36, wow.
And when I bought my first home, I'm in my third home. When I bought my first home, I was 21. So that allowed me to start at 21 to build the equity to buy my second home. That equity in that second home allowed me to buy my third home. So the point is that if you look at people in wealth creation, if you look at where most of their assets are, one is their retirement plan, the other is the equity in their home. And that was done accidentally, meaning they bought a home and it appreciated. So they got a place to live and they built their wealth. Imagine if we have to wait, or if people are waiting till 36 and they've lost 15 years potentially of accumulation of equity. and some of them may never buy, which is really unfortunate because when they retire, they're only going to be able to rely on their retirement plan. Maybe that'll work out.
Maybe they don't have one.
Maybe they don't have one.
That's another thing. Yep.
Yep. Because rent keeps going up.
Yep.
So they might not be able to save adequately. So I would encourage you to look at home ownership, even if it's not quite what you had hoped, meaning if it's smaller than you had hoped. I can't see an advantage to renting, or certainly renting long term. And there are more programs today for first-time buyers than I have ever seen in my 39 years. You can buy a home with $1,000 out of pocket. And then there are programs that add on forgiveness for first-time buyers in certain situations. Some of them are first generation only, which means you didn't own a home and neither did your parents. But some of the grants that are out there that are forgivable, you don't have to be first generation.
How does that work? That's something new. I haven't heard that yet.
Well, it depends on the lender. So there's one lender that I know that you have to make just under $70,000, and they have a $30,000 forgivable loan over 5 years. So if the home doesn't appreciate a nickel and you make that income, then they'll forgive that loan at 20% increments over that 5 years. With the first generation money, the program that Minnesota just had, they had two versions. A $35,000 forgivable loan, half at 10 years, half at 20. And then they had a $32,000 version, and that's forgivable over 5 years at 20% increments. I've helped at least 5 people with that $32,000 program, and that money is available today until it isn't, meaning when it runs out, it runs out.
How do people find out about it?
Call me.
That's a good one.
I'll direct you. And then there's a really unique thing of Islamic financing. So a lot of people may not know that Islamic financing is available to everyone. So not just people that have of Islamic faith. And I did a YouTube video where I interviewed Guidance Financial, and they do a wonderful PowerPoint presentation on my YouTube channel. Now they have access to an additional $50,000 loan that nobody else does. And so you could be non-Islamic, but apply for that loan and have access potentially, depending on your income and credit, to that other $50,000 that you could add on with it as a first-time buyer.
What are the requirements? Seems too good.
It is. It's a fantastic deal. So yeah, I would encourage you to, and there's something called riba, and then which is interest or profit, and then there's halal, which means it's like good, and then haram, which means it's bad. So I'm Lutheran, so I'm not Islamic, but I've learned that through the program. And again, this program is open to everybody. So Guidance Financial will do the financing for you regardless of your religious affiliation. And that's something that people weren't aware of. But if you are Islamic, for example, and you want to be halal compliant and utilize a lender that's done, I think, 40,000 loans, that's Guidance, all across the United States. Wow. They're wonderful people. I've successfully closed loans with them on the purchase and on the sale, meaning other people have brought in their financing. So it's the real deal. That's another option. So
is this more recent, something that came out?
No, it's been around.
Wow.
Yeah, but people just assume, well, if I'm not Islamic, then I can't use that money. No. You can use that money. So you might want to look at it because it would give you access to this extra $50,000 in their rates. They don't really call it rates, but the cost of that loan is basically equivalent to what a conventional loan is. It's very competitive. It's not like you have to pay more to get it. So something that the right buyer could utilize. So there's lots of options, whether it be the first-time buyer money from the state of Minnesota, whether it be this forgiveness grant from this other company, or whether it be some of the Islamic financing. There's all of these options. And unless you work with somebody that knows about it, you're never going to hear about it.
I mean, we chat regularly, relatively. Yeah. And this is news to me. This is really cool.
Yeah, what I tell people is if you want to buy a house, let's talk. Don't let money hold you back. I can get you into a house for $1,000 with the Minnesota Housing Finance Agency utilizing a purchase second in conjunction with your first. So if you've got credit issues, not a problem. I mean, it is a problem, but it's not a problem forever.
You can fix it.
We can fix it. So life happens, I get it. And you can fix that credit problem with some work on your part within about 2 years. So we can get your credit ready. I can help give you some ideas. You have to do the work, but I can give you some ideas and we'll get you in a house. So it's free to talk. And that's why I encourage you to have that conversation so that I can guide you appropriately.
I'm glad we have a recording of this. We're going to be making bullet points on this stuff
Awesome.
with links to you. You listen to investors and financial advisors and so on, Dave Ramsey kind of stuff, and
Yes.
money saving and so on. The general approach is saving up the 20% for the deposit and
Sure.
kind of making it work that way. It seems like it's very hard to outpace the appreciation of homes and
Yes.
keep up with it. And while you're putting money aside, trying to save up.
Right.
What are your thoughts on that?
Yeah. To be honest, Dave Ramsey, I think, has it wrong. To buy a home today, you can utilize as little as $1,000. And if you wait to accumulate a down payment, like he might encourage, and I'm not saying he is or isn't, but some of his tenants are to pay cash for things and to save more and put more down. So here we are looking at the appreciation rates, rolling 12 months metro area, 3%. So if you're going to look at a $200,000 home, that home a year from now, if it appreciates at the same rate, it'll cost you $6,000 more approximately. So you may have saved the down payment, but it now costs you $6,000 to do it. If it takes you 2 years to save, well, that's another $6,000 on top of that. So why not buy a home and stop the appreciation rate from what you have to pay later? If you're paying rent anyway, and the rent today, actually, it's interesting. The rent on many places is more than it would cost you to own.
That's true.
Yeah. So why wouldn't you own if you have stability in your life and you know where you're going to be for a while? Why not own and pay equivalent or less in a house payment than in a rent payment, and then have later the opportunity to refinance it? And again, don't let money hold you back. A lot of renters say, "Well, I don't have enough." Let's talk, because again, I didn't even mention this. There's another lender that will give you the money for the down payment. So not even the state, but there's another lender that has their FHA proprietary program that'll provide the down payment. I think it's $5,000 to $6,000.
Wow.
So we can do it if you want to do it. Well, let's figure out a way.
That's really cool. I just had a thought and it kind of went away from me for a little bit. But overall, for let's say like somebody that's looking to get the finance and everything else, is there a formula that you can make, like a simplified formula, like I make this much per year, this is how much house I can afford, so they don't get in trouble?
Sure.
And then a follow-up to that would be the 30-year versus 15-year mortgages, and what are your thoughts on just making it work?
Sure. Normal rule of thumb, 4 times your gross income is what you qualify for based on an average debt load. If you have obviously more excessive debt, large student loans, those things, then your ratio won't be 4 to 1, it might be 3 to 1, whatever it is. But it's usually about 4 times your income, your gross income, is what you'll qualify for an aggregate mortgage. 30-year gives you complete flexibility on how you pay. So if you have a 30-year loan, you can always add extra to the principal and shorten the life of that loan. So you can turn a 30 into a 20, 25, 28, 15, 12, whatever you want, just by adding extra principal. But you can't go the other way. You can't, if you start with a 15, you can't pay less and turn it into a 30. So based on that, I think you're better off with a 30 so that you can control your cash flow better and pay more when you can and less when you can't, if you want to shorten the life rather than be stuck in something that you can't turn off. Unfortunately, the longer you live, the more life happens, good and bad. But if you go through a normal lifetime, you will have life happen. There'll be things that, job loss, relationships ending, negative things which may impact your cash flow and your ability to make that payment. So staying with a 30-year will give you the lowest payment. And then again, you can add extra to it at will with a 15.
And that'll help you with potential surprises. Home ownership, there's going to be some...
Always repairs.
You always have something going on. Maybe some improvements you want to make and some issues that could come up out of nowhere. But having that kind of a buffer, that definitely helps.
Absolutely.
That's a good point. We can switch to investments because you've been... that's how I met you in the first place, through our landlord that we were renting a townhome from.
Yes.
Which was a great introduction. But same thing. I think it was a 2-bedroom townhome, 2-car garage, and it seemed like that was the perfect kind of investment. It was people that were staying, probably having the first kid, maybe first baby.
Sure.
Maybe a second one, they're just making it work, or a family that's growing, so they tend to stay a little longer. They take care of the place a little better because they know they're going to be there for a little bit longer. And it seems like the consistency in the tenants was better.
Yes.
From your experience, is that still the case? Are those still good investments?
Interesting question. So back in the day when real estate dropped by 50%, the best purchases out there were the condos and townhouses because you could buy a formerly $200,000 townhouse for 100 grand, and you had generally more than enough income coming in from rent to cash flow the property. Over the course of 10 years, or roughly 15 years, since the values have come back, they've now exceeded their former price and are now at new highs. So those great deals on condos and townhouses that some of my earlier investors had bought into don't exist anymore.
Are
So
they looking to sell
some of them are looking to sell
at the same price?
and not at the same price. So that's one of the things, is that the condo townhouse was definitely, I think, the sweet spot of what you should have been buying in the past. I still think it is today, but whereas before we might have had I'm going to say 50 to choose from, now we might have 10 because of the prices are more expensive, and the opportunity at least to cash flow them doesn't exist unless you put a larger down payment down. So it still is a good deal, still is a good buy. One of the things also that's changed is the homeowners associations today are experiencing large increases in their master hazard insurance premiums. And then they're pushing that back down to the homeowners and requiring that they carry more coverage on their HO6 policy, which would be their condo townhouse policy.
We've had that, yep. Seen that
Yep.
quite a bit.
So it used to be you could get a townhouse with a $200-300 association payment.
Yep.
Can't do that necessarily today. You might do it in the twos, but more likely you're going to be in the threes and fours. And if there's elevators and pools involved, you're in the fives and sixes. So that takes away a lot of your cash flow with that higher association fee.
Yep.
Whereas before that was your cash flow, now it's going to pay the insurance premiums. Which,
Yeah, we've had quite a few that were surprised, and they would call us and they would say, well, we have this, the roof is getting replaced, now we have to pay $8,000 or
Yep.
$10,000. And that usually comes out of nowhere. And I think we've had some of them that were they just purchased the townhome. Didn't know the regulations and the bylaws and the association agreements and so on.
right?
And then just walked right into that. That's a pretty tough situation. Is that something you look through as well?
Oh my gosh, yes. So I'm very aware of this, both on my listings, where some of the master hazard policies have made a hail damage in wind and hail larger than 5% back to the homeowner, which then restricts Fannie and Freddie financing. So they've taken projects, this happened to one of my listings in Eden Prairie, where they've taken properties that were formerly financeable are now non-financeable, and you have to get what's called a non-warrantable condo financing, or a lender that's willing to basically warehouse that loan. So that's a real problem, and a lot of the associations don't understand mortgages, and so they make these changes, and then they're really impacting the value. I mean, they're lowering the value because you've taken away financing options that existed that now no longer exist. So it's really unfortunate. I have reached out to some of those homeowners associations, told them, if you can change your policy, go back and change it, because you'll open up this many more buyers that can buy your property. An individual buyer, again, has never bought a house, or maybe one, two, three. They don't own a lot of properties, so they're unfamiliar. And like you had said, they are carrying a greater responsibility, some of them not covering that adequately. So as we talked about with competence and real estate people, mortgage people, and contractors, there's a big competence issue in insurance agents. So I work with a guy that I think is very, very good, and he makes sure that your individual policy dovetails perfectly with the master hazard. So his name is Aaron Nicklay with Farmers, and he will look at both your individual new policy that he's creating and dovetail it with the master hazard, so that you don't get that surprise, oh, hey, there's a shortage, there's a gap in your policy, you need to write a check for the difference. And then unfortunately, people sometimes shop just on price. So they're like, oh, well, I got a policy, it was $200 cheaper to go with ABC Insurance Company. What they didn't understand is The reason it was cheaper is that they didn't have full coverage for that claim.
Exactly.
And then they get whacked, and then it's like, oh my goodness. So it's not really the job of the agent to do this for you. I mean, the real estate agent, but as a real estate agent that knows, I do bring this up so that you are knowledgeable and can bring that information back to your insurance person.
And your agent, we have a really good agent as well, and that's something we're not really running into often. Small agency also, we have policies written by them, and then I compare the same carrier, Allstate. We have Allstate in our home, and I compare our policy and then some of the stuff that keeps coming up with other policies. And I'm seeing that a lot of the agents, they'll make the, like you said, the premium amount work, but the actual coverage amounts are completely different.
Totally.
Or it could be switched and they wouldn't really notify your agent. I remember you were forwarding an email to me from them, actually being proactive and informing you of all the changes in the policy that are coming up. They don't have to do that. They could just have the policy renewed, and the agent, he already sold the policy. Like, you could just never know about it until something happens.
Exactly. Should we talk about that?
Man, yeah, I think we were doing 2 or 3 interviews already, but we'll have a public adjuster on. There's just so many changes that are going on. And I mean, we're not public adjusters or anything. None of this is like legal advice or, insurance policy related advice, but just definitely something to keep in mind. What have you run into so far?
Yeah. So there's 3 main things that I recommend people discuss with their insurance person when they're placing coverages. One of them is replacement cost versus actual cash value. ACV, which is actual cash value, versus replacement cost. So if you have a home with an older roof, with actual cash value, they're going to depreciate that down.
Yep.
So at the time of the claim, they're not going to pay for a brand new roof. They're going to pay for the roof minus the depreciation. Replacement cost means you got the damage, regardless of the age, they're going to replace it. Now there's some hybrid policies that have a depreciation schedule inside of that, but that's basically what those 2 words mean. Then there's matching, where, if the color can't be matched, then you are eligible for a replacement. I can't tell you how many times I've seen ugly roofs and ugly siding where the client did not have matching provision, and so therefore the roof looks like hodgepodge. And same with the siding. They've got one wall of, where hail hit it, looking brand new, but because the other faded.
Or even like pieces on the side of the house were replaced and then just looks like a checkerboard.
Exactly. Terrible.
All the time. Yeah.
Terrible.
So the ACV one is dangerous because a lot of the people, basically, depending on the age of the roof, it may just roll over into becoming an ACV policy. Some policies have it written in. And we've had this over the last probably 2 years where we get calls from clients. They already have an active claim. We talked about this multiple times. We had some videos on this, but we walk into an open claim. They're asking us to assess the damage, write the estimates for the repairs. We do. And basically, when we submit it, we find out that the homeowner has ACV policy. And when the adjuster came out initially to inspect it before we got there, totaled out the roof, agreed with our estimate, the pricing, but now the homeowner has to pay out of pocket for, probably over a third of that, if not 2/3, because the roof has served its life, and they have no idea. And now they have to pay for it because it's totaled out, and they can't get it insured now.
Right.
And then they're really in a pickle.
And they're in a pickle.
Yeah.
Yep. So understand your policy and understand the verbiage. And the other one would be marring for soft metals, which is dings. So that might be more cosmetic in nature, but do you want your home to look like, all full of pockmarks all over it? Probably not. That'll definitely impact the sales value.
Yeah, my problem with that would be just the repairs that they're directing contractors to perform. So a lot of the carriers that will pay for those metals, because shingle impact, it's very objective. We could say it is hail, they could say that it's mechanical. We could have engineers come out, they could have engineers come out, and it becomes this kind of battle on the metals. And anything that's going to be softer or something that's going to be just more visible, it's pretty obvious. You can tell right away. So that's generally something we use as proof of that, plus the direction of the storm, plus the time, the date of loss, and so on. The spatter on the shingle. Technically, that should be all we need. But a lot of the times we get into these battles and it's kind of a push and pull. Well, the insurance companies are now directing us to perform the repairs on those metal components without touching the shingles. So they're asking us to basically, exactly. Yes, thank you. So we were on the phone and we kept on going back and forth and just wasn't going anywhere. We met with adjusters on site and they're telling us, I can't tell you how to do this because you're the contractor, but I'm telling you it can be done.
Oh my
So they expect us to basically get the metal out, put the new one in, have everything be the way it was with the underlayment and everything else, and the shingles be reused. And
Wow.
we have estimates written where it's shingles are to be reused,
Oh my God.
like remove and then replace the shingles, which is against code. We can't reuse the materials that were already nailed through. You're gonna have punctures all over. Oh man, this kind of stuff, and it just becomes like a headache for us because the homeowners think that we're delaying the process, and then you run into the issues where we're trying to keep our license for one,
Right.
to be code compliant,
Right.
and then two, kind of make sure that we look out for the homeowner. So there's all of these annotated images. There's pages and pages of documents getting sent over, and for the adjuster just to reply that we stand by our position. So the good tip would be for the homeowners to start getting involved as well. So the policy review and then just the homeowner involvement, being proactive.
Yep.
I mean, contractors with there's a lot of storm chasing going on in the roofing industry. A lot of them overpromise, and they say that we'll advocate for you, we'll do all the negotiation for you. We're not allowed to do that.
Sure.
As contractors legally, we can't do that because we can't discuss policy language. Homeowners, you are the policy holders. You are the ones who have the right to actually look into it, discuss it, go back. You can also hire a public adjuster who would be able to do it on your behalf, represent you.
Okay.
And it just becomes this kind of a difficult thing where you're trying to kind of convince the homeowner that the insurance company may not have their best interests at heart.
Sure.
And it's very tough to do. So the loyalty thing is big, and then just the trust that it's going to get taken care of because we've been with them for 30 plus years.
Mm-hmm.
You seeing the same thing?
Yes, and I guess that kind of goes back to the importance of having a home inspection and having the inspector go up and look at the roof. Some of them will, and then from that you can determine whether or not you may run into a problem with insurability. What an insurance company will oftentimes do is bind a policy, and then 30 days later they'll go out and take a picture and look at it. And if they determine that the roof is not viable at that point, then they'll require it. And so you may have to put a brand new roof on, depending on the situation, 30 days after you've already closed on the home and used all your money. Mm-hmm. You may be able to go back and ask the seller to make a claim. Maybe that will work, maybe it won't, because we don't know what they had for a policy. But if you had known that damage up front and that it was likely to be totaled and worked through that through the home inspection process, you might not get caught with having to ultimately replace that roof on your own nickel. Mm-hmm. So I think the involvement, the roof and the siding and all of the hail damage and storm damage is really not factored into most home inspections to the degree that it should. And that's why doing it up front, as part of the selling process, to see what you've got, what can be claimed, so that everybody is aware of what the potential problems are, and then can solve them. We can solve anything with usually with money, but we can solve anything once we figure out what we're dealing with. But take a step back, work through this, work with the right people, and absolutely do a policy review, because you probably received a letter from your insurance agent that your premiums are going up this year. In that same letter, they also have said, oh, by the way, we changed these words. Well, to you, you're not in the insurance business, so ACV, RCV, matching, who cares? Well, you should care, because it will absolutely determine whether or not you can make a claim. And to Artem's point, they actually have an app that they can track storms in the past. They will meet the contractor or the adjuster on site. They will point out the damage. They will point out the storm. So if you work with a contractor that's knowledgeable, that has all of the ability to bring the information to the table, you have a much greater chance of getting that claim paid for, rather than if you call the insurance company and say, send out a guy. Don't do that, in my opinion, because you won't have the same fiduciary obligation. The insurance company employee is going to represent the insurance company. A contractor is going to try to help you, and you need to do reviews, and it's up to you to do the review with your insurance agent to make sure that if things have changed contractually in the language, that you're comfortable with those contractual changes. Maybe you are, but maybe you're not. So you should at least know your options, and then you make the choice that's right for you.
Yeah. Another good thing that we've been implementing is yearly inspections. Generally, we would, if we get a call or something, if there's an issue, people are usually thinking, I'll call the roofer then at that point if there's a leak. Generally, by the time you see a leak, the problem's been going on for a while, especially if it's like a bath vent connection or maybe a slow leak where the nails were over driven into the shingle. But we get those calls, and by that point, you're seeing that it's going to be, well, for one, not claimable with insurance if it is going to be, severe damage. They may pay for parts of it, not all of it, or they can say it's just the ongoing thing. You're outside of that date of loss, basically.
Sure.
But having good reports, like yearly reports with pictures annotated if there are issues, or just good condition reports year after year, and then being able to have that, keep that track record. Like, most people don't think about it because you don't look at it. Generally, unless you're a roofer, you never look at the shingles when you're driving around, or yeah, just something that doesn't come up often. So with the roofing specifically, and getting those reports, getting those pictures, having track record of that. If there is a storm, the insurance company, let's say, comes out and they have an adjuster that's difficult to work with, or just says that he doesn't see anything when all the other neighbors are getting roofs replaced. He could say, even if it's older hail damage, this could have happened in the past. Well, now you have all this track record of reports with photos and dates from a contractor that's been doing it for the last 7 years. And now you can say, well, all of these show that there's zero damage. This was in good condition. Yearly maintenance was completed. Ventilation was good. No broken seals, no overdriven nails. Everything was checking out. No granule loss. And now you're saying there's, this is old damage. Like, when did this actually happen?
Sure.
So this has been something we've been working on, putting together, training on.
Wow, that's really interesting. I didn't realize you guys did that.
Yep.
So that's a service that I have never heard of a roofing company do. So you provide like a warranty. It's not really a warranty, but it's a documentation that could be used for a future justification that there has been a change in the roof.
Yep.
Is there a charge to do that?
So we're kind of dialing that in right now. For past clients who've been doing it at no charge.
Okay.
So we're kind of scheduling those out, following up, making sure that was, things are good. For future, we're setting up a plan. It's going to be a good plan. It's something that's going to be very competitive as far as the pricing goes.
Okay.
And at the same time, we're going to try to include the maintenance items, like resealing some of the, maybe if you have fasteners that weren't, the silicone is peeling off or something, or
Sure.
you see something that needs to be tightened down, or maybe some pipe boots need to be replaced. Those will be included.
Okay.
So small things like that. We're also working on upgrade options too. We have a couple of videos coming out with that. Bath caps, exhaust caps that are wider as far as an nailing flange and just more durable.
Okay.
That prevents water from entering the house, for one, and then two, the ducting on the inside of the attic. A lot of the calls we've gotten this winter was condensation, attic condensation, because the ducts from the prior roofer got pushed down or maybe dropped completely into the attic, and all that steam was just blown into the attic for during the colder months, and then it starts thawing, and then you get the rain inside of the house.
Yep.
So we've seen a lot of that. This product actually solves it. It was
Nice.
really cool.
That's
Pipe
a
boots
great
that are lifetime warranty, class 4 impact resistant shingles, and there's a price increase coming up. So by April, we're trying to lock people in and then get some projects going just before that happens, because that's going to be a lot more expensive. There's a lot of those coming, labor and materials. So
Right.
definitely something we want to mention. Yeah.
Like, when's the best time to buy a home? Yesterday.
Yeah.
Well, when's the best time to do the roof on any of the repairs? Yesterday. Because
Yeah.
it's never going to get cheaper.
Yep, it's only getting more expensive year after year. We have 2, 3, you name it, we have it, like multiple price increases and so on. So, yeah. Let's see. For buyers, we can kind of do, like a Spitfire deal. What are like top 5 things they should never do when house hunting?
They should stay away from, I'm going to say, the third-party sites like Zillow, for example, as their primary source of information. So when I work with a client, I set up an MLS search. Every other real estate website that's showing homes is redisplaying, per their algorithm, the data right from the MLS. So if you want the real-time, accurate data from the source, you need to have your search set up from the source, which is the MLS. So a lot of people bounce around on Zillow and then say, hey, John, how come this home over here is not in my search that you set up on the MLS? And I say, because it's sold. They're like, but it doesn't show that on Zillow. I'm like, well, it doesn't show that on Zillow by design, because Zillow wants you to click on that ad so they can sell that lead to another realtor. So the MLS is updated and everybody pulls from that. So you should use that as your primary search source. So that's one tip. Tip number two is don't even begin the search until you've figured out your budget and been underwritten and found your financing. Now, we've talked a little bit about the financing options, and as you can tell, there are many. And so work with the lender of your choice and get approved for the program of your choice so that you can have your pre-approval letter. Once you start searching, I can almost guarantee you're going to find a house. And then if it's a nice house and you like it, so do two other people. And so you're going to be like, oh, I want to make an offer. But you can't make an offer until you have your pre-approval letter, because a seller won't negotiate with somebody that may not be able to complete the transaction. So having that pre-approval letter shows that you can complete the transaction. So getting pre-approved is probably mistake number two. And I won't even work with you as far as taking you out and showing you a house until that underwriting is completed, because it's not a good use of your time or mine. We want to make sure that if we find something and you want to do it, that we can do it. So getting underwritten would be a mistake. Not getting underwritten would be mistake number two.
Gotcha.
A third one I would say would be working with people throughout your process that aren't maybe the experts. So a less competent real estate person, maybe a friend of the family, your best friend's mother that sells 3 homes a year, or your friend that decided to sell real estate because they wanted to change careers or whatever. They're wonderful people, but unless they have transactional history behind them and satisfied clients, they aren't going to be able to give you the same level of advice. So they're great people, take them out for dinner or a beer, but don't necessarily buy a house with them or let them represent you, because you won't get the same level, in my opinion, of service. And that goes beyond real estate. That goes into the mortgage world. That goes into the insurance world.
Yeah.
It goes into the contracting world. So always pick the best people that you have options to choose from, and the cost is going to be relatively the same. So if you're going to pay the same, why not buy the best, since it isn't going to cost you anymore? So I understand you still want to go to Thanksgiving dinner and Christmas, so you might have to use a certain relative so that you're not excommunicated. I get that. But at the same time, if you have that ability to pull away from that, I'm going to encourage you to do that. So pick the most competent people that are available to you so that you can have the best representation.
I think those are like good 3. I want to do another one. Let's see. So what's a good way? We'll focus on the sellers. What's a good way to increase value of the home if they're planning on selling? Anything that you can think of as far as improvements,
You bet.
and then maybe some things that don't add value that people think they do.
Sure. So if I'm a seller and I've been in my home for a long time, I either upgraded it as I've gone, or maybe I've done a halfway upgrading, or maybe I've done nothing. So you may say, oh my gosh, there's so much to do here. I wish I could just sell this for cash and be done. And there are companies, and I have investors that would buy your home for cash. However, you will leave a tremendous amount of equity on the table. When somebody comes in and buys your home for cash on a private party arrangement, meaning not through the MLS, they're there to arbitrage your equity. So if you want to do that, if you're looking for speed and you're not concerned about maximizing your profit, you want to leave money on the table, knowing that you're leaving money on the table, then by all means do that. On the other hand, it might be more worthwhile to make some small improvements and to invest a little bit of money in getting your home market ready and putting it on the MLS. So things like having flaking paint scraped and painted.
Except if it's lead, then you have to follow
Yes.
the guidelines. On
Yep,
that.
there might be lead-based remediation.
Don't
with
eat
your
the paint
contractor.
chips. Yeah.
Yep. Having things like your roof looked at and your siding and windows through your insurance, if it's applicable for a claim, that would add value, because while it might not be dollar for dollar on the cost of doing those repairs, you'll be subtracted the full value if you don't. So for example, if it needs a new roof and the new roof costs 30 grand and the shingles are curling and you want to sell it that way, well, somebody's going to deduct 30 grand. Whereas if you could have made the claim, and maybe even if it cost you 10 grand under your insurance policy to make it, you're still 20 grand to the good. So making some repairs so that your home is completely financeable under all types of financing, I think is recommended. Other things a seller could do would be neutralizing. So let's remove that wallpaper. Let's cover and paint up over that smoke. Let's replace that carpeting where the dogs have done their business.
Do you call it out?
I do.
You do, okay.
Yeah, I'm transparent.
Nice.
I lay it out. I mean, in a polite way, but I want to be straightforward. So there's no sense in not acknowledging what's going on because it doesn't do you any good, doesn't do me any good. You don't have to do anything. However, you can sell your home on the MLS as is. So if you said, John, just sell it, I'm not going to do a darn thing, it'll be reflected in the price. But through the MLS, you have the whole world looking at your home and bidding on it. If you respond to a billboard or a postcard or a letter saying, let me take this home off your hands and there's no realtor involved, I'm going to tell you again, you're going to give up a tremendous amount of your equity that you could have recovered through a traditional MLS listing.
I think you just killed some deals for some investors.
Yes.
Oh man, I think we got so much information here. I get notes, and I mean, this is probably like a third of the questions we have prepared, but we should do a follow-up for sure.
I would love to come back. Thank you for having me. I've enjoyed it.
This was a lot of information. We're gonna transcribe all of this and then maybe have it be timestamped, bullet points, and so on. But
Perfect.
any other information? How can people reach you? I mean,
Yeah, if you would like to reach me, I'm at 612-386-7027. You can email me at john at johnmazzara.com. And my website is Minneapolis, spelled out, stpaulhomes.com. So Minneapolis-stpaulhomes.com. You can find me on YouTube. I have a channel. You can Google my name or drop it into YouTube and my channel will come up for you. And I interview other providers that provide some of the financing that we talked about, as well as ancillary service providers that are related to real estate. So I'm available. I can be easily found, and I'd love to help you. And if you need names of contractors or insurance people or mortgage people, again, I'm happy to share resources and add value to your life wherever I can. Thank you.
thank you. Thanks so much.
Hey, you betcha.
This was awesome.
Cool.